Market is absolutely skyrocketing here as earnings are actually better than anticipated. And a lot of the companies we've been bringing up on our watch list and doing valuations on are absolutely participating in this rally and actually are overperformers, which just goes to show if you understand how to run valuations, the market's giving some phenomenal opportunities. First two names we want to talk about here is going to be AT&T and Verizon. These two companies were left for dead, but these are strong free cash flow yield companies. Yes, they carry a lot of toxic debt, but management was still issuing stronger free cash flow. And so the market was discounting what management thought they were going to execute, and management is definitely coming through for both of these companies. And we ran a valuation on Verizon, and as ugly as it was, this is not a company that I think anybody really wants to invest in, but sometimes the prices get so depressed, you have to take a look and see what's under the hood. And so where we got interested in Verizon was definitely that $30 to roughly $32 price target, and Verizon did get as low as about $30.50. And take a look at what it's doing today. It's up $34 a share. When we factor in that we could have bought this, collected a dividend, and still ripped up 10% from the recent lows, that's a 12% gain in less than one quarter. You know, this is where it gets interesting. I think it's starting to hit fair market value. I wouldn't really chase this one anymore, but I think between that $35 to $37 mark is where it's probably going to end up settling in here, depending on market activity, of course, which is going to lead us to our next stock, which is Raytheon Technologies. The reason why we started looking at this one, I definitely did a bad job at looking at more your true defensive stocks when we talk about war stocks and stocks that protect the borders. But we started looking under the hood of Raytheon Technologies and said, you know what, this one's pretty interesting around that $65 to $70 range. And I would probably be willing to reach a little higher on it, considering all the geopolitical drama that's taking place here and how important it is to have defense spending in our budget. And it's pretty clear that there's probably going to be an uptick in defense spending. Not only is there an uptick in defense spending, this company reported earnings, beat on both top and bottom line, and is doing a substantial buyback as well. This is a company that has raised its dividend consecutively for many years, and the valuation seemed reasonable. I didn't think you were getting a screaming deal around $70 a share, but I thought it was reasonable to start building a position. And so while we have Verizon pushing nearly 9% on the day, which is just a stupid move when we consider this is a legacy company that was just getting overlooked, now the market is repricing all that free cash flow. The fact that the dividend yield could possibly stay intact here, and that they could possibly manage that heavy debt load because the free cash flow is so strong. We take a look at what Raytheon Technologies is doing today. Additionally, a very strong move once again, which just goes to show if you ignore all the noise that's taking place, if you don't jump on the hype, and you just stick to your valuations and have a process, it can work out here. But we were definitely more focused on defensive companies that could keep earnings in a bad economy and possibly recession and can keep dividend payouts going. But companies we need on a daily basis, regardless of what the world's doing. We're obviously going to need defense spending. We're obviously going to keep communications intact. So let's talk about the massive underperformance here. My biggest concern has been regional and old school brick and mortar banks here. Big exposure to paper losses. We said stay away from this. Capitulation to happen with these banks before we get interested in them. We want the Fed to start pivoting before we get interested in them. And so regional banks, some of your bigger brick and mortar banks that don't have value propositions that are a little unique, we want to stay away from. Along with that, we also said commercial real estate is probably a better place to stay away from as well. So on a day like today where you have basically the whole indexes trading above 1%, you have companies like Bank of America massively underperforming. And you have Realty Income just underperforming slightly to the market here. Now, this is one that I think is getting interesting around that $45 to $46 range, and it's hit about $48 a share. I definitely think there's going to be refinancing questions when we think about longer term yields here. But overall, I think the portfolio is fine. I think the valuation is reasonable. And the only way I get interested in any of these kind of companies is if they sell off big time and I get a massive discount to take on the risk here. Because I think there's going to be diminished returns for multiple years for companies like Realty Income and companies like Bank of America. So in order for me to get excited about them, I need them to go on sale big time. And so one company that was becoming interesting between that $50 to $53 mark is PayPal, because PayPal to me is selling off with your regional banks and your traditional banks. but has a different value proposition here. This is another free cash flow story. And with the recent sell-off in the market, I think there's acquisition probabilities here for a company like PayPal. I would not be surprised if they make some sort of acquisition here really soon. I think they're well positioned in this type of economy. And when we look at what's taking place with cryptocurrency, once again, Bitcoin starting to get a bid, starting to break 29,000. PayPal should benefit from more transactions taking place on that aspect of their platform. And so while I'm not a big proponent of owning Bitcoin, I'm not really interested in Bitcoin, I don't mind having access to the shovels that are being supplied for Bitcoin, which PayPal does offer that. So that brings more people on their platform, that causes more transactions, which brings up their fees. And along with that, they already have a substantial business model that I think is fairly strong. Now, obviously, it's getting competitive. I don't love the name, but I think at the right price, you have to look at PayPal because they can absolutely make some acquisitions and they can do some pretty unique things. And so you guys can see here, roughly $50 a share is ideally where I would get in, but I understand building in around $52, $53 a share, which I did. I started building right around that $53 mark. And right now, I'm doing fairly well in the position. It has a long way to go. And I definitely think there's competition and headwinds for PayPal. But I also think they have a tremendous amount of opportunity considering that strong free cash flow and the ability to possibly do mergers and acquisitions and do a little more unique things on the fintech side of their space here. Now, obviously, they all can't be winners here. And so Pfizer is definitely one that I missed on. I thought the acquisition of CGen would be great. I think management really let investors down recently, and I did a video on that as well, so feel free to look at that one. This was one I definitely got wrong because of management. Nothing that I did wrong, but when they reported quarterly earnings, they gave strong guidance. I factored in a lot of headwinds for the company and got a fair market value between $29 and $32 a share. And so it is sitting in that area, but I do think that this one can go lower because they're probably going to kitchen sink their next earnings report. But where this company becomes extremely interesting is the fact that they've been building out their pipeline. They did acquire CGen, which is going to add more dynamics to their portfolio going forward. And this is definitely a 3 to 5 year investment here. So I do think there's more downside risk possibly to Pfizer, especially if it takes out $30 a share, which I'm sure is going to be a key mark for a lot of investors that are probably going to dump the stock. Short sellers are probably going to come in even harder and push the stock to the mid 20s maybe. At that point in time, when I look over the earnings, I'll share them with you guys. We'll go over Pfizer and where I think it is long term. I do think the valuation is making more sense at where it's at, considering they have the acquisition of the company sitting at $170 billion market cap, paying roughly a 5% dividend. That dividend does scare me, guys, because earnings are dropping very hard. So a high dividend payout could get slashed. Just want to throw it out there. It's going to come down to how fast they can turn their pipeline into profits. So as always, guys, really appreciate everybody's time. Just kind of want to go through and confirm that, sticking to a process is extremely important regardless of what the market's doing. Sometimes markets are irrational, and they're very irrational right now. And so with Bitcoin skyrocketing, with markets now bouncing off of major moving averages that we talked about, we basically said 4,200 to about 4,150 is where we're probably going to settle in. We're bouncing off those levels. Could we retest it? Sure. I think if we take out 4,100, I have some concerns here. But I do think year-end rally is set up if we maintain above that 4,150 mark. And we do get a Santa Claus rally because there is a tremendous amount of money on the sidelines. But with that being said, we obviously know about the war, geopolitical risk, inflation still being here. So lots of questions. I do believe we will enter in some sort of recession next year. And so the companies that I've been really breaking down have been companies that are deeper value type companies that I think can maintain earnings through recessions. So as always, guys, really appreciate your time. Thank you so much for spending it with me. We will see you in the next one. Peace.